Today is Monday, September 21st, and this is the end of day review for the live trading room. So if you've been in our live trading room anytime at all, even just for today, you've started to understand that the adaptive entry system is the market metrics system that we use to determine when we should enter and exit trades. The adaptive entry system was designed by New Cycle Trading and Analytics specifically for the purpose of creating simplicity. It's been my observation for years and years and years of trading that technical patterns are essential for trader success, but they get to be overly complex because there are so many different indicators out there and there's so many different opinions about tie these 3 to 5 to 10 indicators together and that will give you your signal, but it's just exhausting trying to wade your way through learning all of that. So we did that on behalf of you, our community of traders, we being a collaboration between Options Moneymaker and New Cycle Trading. And we did a tremendous amount of testing to determine which of those indicators we felt provided the best, most probable indication of a move in that direction, higher or lower. And then, thank you to the team at New Cycle Trading, Craig and his team, we translated that collection, that consensus of signals behind the scenes to a very, very simple to read signal. So for example, and by the way, let me just say, I'm sharing this with you on a NASDAQ 100 futures chart, a 5-minute chart. The signals work no matter what time frame. The signals work no matter what underlying derivative, equity, stock, option you want to trade. But I'm demonstrating this to you on the NASDAQ 100 futures. When we see a vertical green bar, that's telling us simply to go long. If we're trading futures, we're going to go long. If you're trading options, you're going to buy to open a call or some other long strategy. When we see a vertical red bar in futures, we're going to go short. If you're trading options, you're going to buy to open a put or some other short strategy. It's really that simple. Green long, red short. There's a couple of other things around. Did the signal come on within the first 3 seconds of a new 5-minute bar printing? That's one of our rules. We stick to that. And then beyond that, the labels you see here, the M, the C, the T plus, those identify the 4 different styles of signals. There's a trend indicator. It's basically telling us when a new trend starts. Right here, the T is a new trend starting. A C is a consensus signal. It's looking at all of the indicators behind the scenes that interpret a consensus of direction and says, here's a consensus that we should likely go short. The T plus is saying, we think that the trend, in this case, red means we're going to go short. The trend is continuing to look promising. So we're going to jump back in if we've already taken a profit and are out of the trade so that we could leverage more profit from that trend. And then the M is simply a momentum signal where no time frame, no stock, no option or future is going to move straight up or straight down. Even in a 5-minute bar, there's a range. Like this particular bar, what was it, 1025 this morning, had a 49.25 point range to it. Within that bar, there's cycling movements up and down. If I went to a 30-second or a 1-minute chart, you'd see all of those. So what you can see here is that there are movements lower, there are movements higher, even though the overall trend lower may continue. Momentum signals give us a indication that there could be a pause in that current movement lower while we retrace, all tied back to Fibonacci retracement patterns, which have been historically one of the best patterns to trade. So We do all the hard work for you behind the scenes and present to you a very, very simple to follow price chart. Now, I'm not going to get into all the lower indicators here. There are ways that you can interpret those to have a leading indication of which of these signals may be presenting itself. All right, so that's the gist of the adaptive entry system. We're pretty proud of the system. We're excited that we've had an opportunity to collaborate so closely with the developers, the programmers, and develop something that we think will create for you as an individual trader an opportunity to build a very, very strong trading business. Now that leads me to our tracking. So every day we take a look at all of the signals. Now I do it prior to 7 a.m. Eastern, but starting at 7 a.m. is what we really focus on. So here are all of the signals that we took today between 7 a.m. Eastern, and the last signal we took was 5 minutes after 3 Eastern. Okay, so there was 55 minutes left in the market day at that point. We identify whether or not we're going long or short. We identify which of those 4 strategies we're trading. There's actually a 5th strategy out there we're not actually including in our totals yet, but we're accumulating data on it, and that's trading a fractal, and I won't get into teaching that right now. But basically, was it a consensus signal? Was it a trend signal? Was it a trend, a T plus, which is a continuation signal? Was it a momentum signal? So we're tracking all of that data so that we can understand how each of the 4 different signals and methods for entering a position, how they perform individually, and then collectively how they perform as a whole. We're looking at the total profit and loss on each of those. Now on NQ, when you see, for example, 10 points of profit, 10 points of profit multiplied times $20 a point per contract. So if you're trading one contract, it's worth $20 a point. That's a $200 profit right there. A 5-point profit is a $100 profit. A 20-point loss is a $400 loss. So what we do is we encourage our community to set aside emotions, just trade the signals. Now, I have to confess, this could be a little emotional if you come to trading and you're one of those traders who likes to trade early and you start at 7 a.m. and the very first trade you take on a Monday morning loses 20 points. That can put a lot of people back on their heels, but the more you become familiar with this pattern, the more you become familiar with this system, the more you realize it's just a matter of taking the signals as they come. And I'm going to show you some averages here in just a minute that really strongly support that. So yeah, you took a 20-point loss on the first trade, and then you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trades, all losses between 5 to, all profits between 5 to 10 points. Then we had another 20-point loss. And then the rest of the day, we didn't have any other losses. So we're trading a system that I think presents a very realistic opportunity for traders. You're going to have losing trades. That's just the nature of trading. You're going to have a lot of winning trades if you're trading a good system, which the adaptive entry system is. Winning trades will far outdo the losing trades. Now, that said, there can be losing days. There are days that we lose. And so that's why what I'm guiding you to here is the importance of looking at your averages. How are you performing overall when you net together your winning trades, your losing trades, your winning days, your losing days? And is that an overall positive average? And in the case of the adaptive entry system, the answer is emphatically absolutely yes. It is a positive average. So I'm going to show you the averages here. When we look at the taking all of the signals, which are those 4 signals I identified for you, and we look at various time frames. Maybe you want to trade from 7 to noon. Maybe you want to trade from 8 to noon. Maybe you only want to trade from 9:30 to noon, or you might want to trade from 7 to 4. Whatever time frame you want to trade, we can help you understand how that time frame has performed. Now, what we have here is 70 trading days of history. We have a whole bunch of data prior to that. But what we did was we drew a line in the sand and we formalized this and said, we've released the adaptive entry system to our live trading room. And at that point in time, we started to track in real time every single trade during our live trading room session. So everybody in our live trading room can see, well, we had a winning trade. Well, we had 2 losing trades. They just see what that is and they see what the end of the day is. So we're going to continue to gather this data, and the longer this data is accumulated, the more integrity all of the averages have. But what we've done is we've taken a look at how these averages perform over the course of 70 trading days. So we've stack ranked the averages. We look at the daily profit average. This is profits, dollars of average profit per day based on trading 1 contract. We look at the number of negative days. How many losing days have there been in each category? We also look at the win-loss ratio, which most of the win-loss ratios are somewhere in the low to mid 70% range, which is really strong. And we stack rank those factors. And we look at, well, what's the optimum performing category? And right now for us, it is this trading all of the signals from 7 to 4. Now you might not want to trade from 7 to 4. That's okay. I'm not suggesting that this is the only way to be successful. I'm saying we're providing a ton of data to know if you traded from 7 to 4, what you could reasonably anticipate. And if you decided you only wanted to trade the trend-oriented signals, which is the trend bias signal, which is the T label on the chart, and the T plus label, which is the continuation of that, we can tell you what your point average could be, what your dollar average could be on a daily basis. So the idea here is to provide a solid core foundation of data for you. And if I look at every one of you as a business owner, you own a trading business. And I look at my team and myself as our responsibility, including New Cycle Trading, our responsibility is to be your business coach and to help you understand, well, if you focused your attention over here, this is what you could expect. If you decide instead to focus your attention in a different way, a different time frame, or a different set of signals, this is what you could expect. There's no one right answer. It's entirely up to you as a trading business owner to decide how to approach your trading. We're going to do everything in our power to provide data to you so that you know exactly how to make the best informed decisions for yourself. Okay, so now we're going to back up and look at today's performance. Here's a summary of today's performance. And I've got all these different categories, but the ones that are highlighted in green, there's 2 that are highlighted in a slightly darker green. 9:30 to noon, taking all signals. And 7 to 4, that's 7 a.m. Eastern to 4 p.m. Eastern, taking the trend-oriented signals, the trend bias signals, and when a new trend starts, as well as the continuation signals. And what we do is we take those numbers and we translate them into a personal trading financial forecast. And I'm going to do that here in just a moment. In the light shaded green, that is the category that we have identified recently as the optimum performing category. And we'll talk about that also. But before I talk too much about the numbers here, I'm going to jump to the personal trading plan. Now, if you've not seen this before, this is basically a sophisticated financial forecast tool that was designed specifically for traders. So just a couple of highlights here. We are starting with the assumption that we have $5,000 in the account and we're trading futures. We're trading NASDAQ 100 futures. Now you can trade anything you want. You can start with whatever amount you choose. You can trade options. This tool also has an area where you can track your options performance. But we start with $5,000. Now, when you're trading futures, each contract that you trade requires a certain amount of margin. The broker requires you to have a certain amount in your account, requires a certain amount of what's called margin in order to execute that contract. And we know that at our broker, the broker that we use, Infinity Futures, it's $500 per contract of margin to trade NASDAQ futures. So with that in mind, we set a limit. And we say we do not want to allocate more than 10% of the balance of our account to margin. So if we start with $5,000 and we know that margin is $500, 500 would be 10% of 5,000. It means that our trading plan has said you can only trade one contract at this point. Now everything in blue are the weeks that have already passed by. That's actual performance that's been logged in every day as we complete the market day. As the account grows, the number of contracts that we can trade grows because now we're still less than 10% of the balance of the account. However, 2 contracts requires $1,000 of margin, and we have more than $10,000 available in the account to trade that. So the program, the personal trading plan, which is designed specifically for you, you're going to build this as your financial forecast tool for your personal trading business. This plan will continue to scale the number of contracts until you decide you don't want to trade more contracts. It will just mathematically continue to scale the number of contracts, and at some point you can limit the total number of contracts that you trade right here. So we have ours capped at 3 contracts. You can make it whatever you want. But right now we have it capped at 3. You can cap it at 10, you can cap it at whatever you want, knowing that whatever that cap is, it will always be and remain less than 10% of the balance of the account. Okay, so that's the personal trading plan. We are at the end of the trading day here, and the most important thing you can do at the end of the trading day is to update your financial forecast. Now, one thing I want to say here is that we build a financial forecast assuming that we're going to have losing days. We don't want to be foolish. We don't want to be unrealistic. We don't want to set expectations we can't possibly meet. We are absolutely 100% going to have losing days. That's just the nature of any type of trading or investing. And in order to make it simple in building the financial forecast, we have allocated 1 losing trading day in every 5 days. And we've just made it simple. We actually build it in on every Monday. Now, I kind of like that today because the plan for today was to lose 22.64 points. But we didn't even come close to that. We had a nice winning day today. So I'm going to show you what we're going to do here and then show you how to project out your income, where you can see what your income could potentially be over the course of the next 12 months. All right, so I'm going to jump back to my other spreadsheet here. All right, so we're in the 7 to 4 category, trend bias and continuation signals. We did 60 points today. 60 points at $20 a point is $1,200. $1,200. So let me jump back to my trading plan. This is where, right here, we're going to plug in what our profit or loss performance was for today. But I need to scroll back. My trading plan has scaled me up to 3 contracts, and I'm maxed out at 3 contracts. So I did $1,200 today per contract. So we did $3,600 on 3 contracts. I did 16 trades. And so 16 trades times 3 contracts per trade is 48 contracts. Okay, so now we have our data entered for today. Here's the most important thing you can do, second only to trading. Second only to trading. You come up here to the top of your trading plan. And this number right here is telling us what the average profit performance is for our winning days. When we have winning days for the first 11 and 11.2 weeks out of a 52-week forecast, for 11.2 weeks, our winning days are averaging 35.17 points per day. 35.17 points per day. That's what we're averaging. Our losing days are averaging 22.64 points per day. And we're going to double check and see how many losing days we've had, because our 52-week plan calls for an average of 1 losing day every 5 trading days. Well, we have 11.2 weeks behind us, already expired and logged in and locked, and we've had 10 losing days. So we're actually slightly favorable. If we had a losing day this week, we'd be right on plan to our 11 weeks, but slightly favorable. So there's no reason for us to interfere with that number. Actually, these numbers will take into account if there's a negative variance here on the frequency, so that we have a realistic forecast. All right, so now I know what my run rate is. I know what my average losing days are. I know what my average winning days are. And these numbers right here are what you're going to plan, what you're going to forecast for the rest of your 12-month financial forecast. We have 11.2 weeks behind us. This is a 52-week plan. So we've got another 41 weeks. We've got another 41 weeks. And what are we going to base our forecast on for 41 weeks? We're going to base it on what we've been doing. We're going to base it on what we've already developed as our experience rate. We've got a mixture in here of some really strong winning days and some really strong losing days. I don't really care when I look back that I had, a loss of 58 points that particular Thursday. I don't really care. Because when I plug everything into my trading plan and I look at my averages, I am going to be able to hit the income that I desire. I'm speaking on behalf of you. You can look at your trading plan and know that you can hit the income you desire. So I'm going to base my future forecast as of right now on 35.17 points for my winning days and on 22.64 points on my losing days. So what can you do starting with $5,000? Now, this is not pie in the sky, hey, behind smoke and mirrors. This is literally math and science. The science of the mechanics and the algorithms that have been built by New Cycle Trading in the adaptive entry system, relying on historically proven and tested indicators that have been aligned and coordinated to present a simple signal to our traders. That's the science. And the math is just simply saying, well, I'm going to plug my numbers in here, and I'm going to take a look at what my maximum exposure is in terms of margin, and I'm going to take a look at, well, what's my maximum risk tolerance in terms of contracts, and my 12-month financial forecast is suggesting, it's not a guarantee because you still got 41 weeks ahead of you here, but my financial forecast as of right now with 11.2 weeks behind us is that I can go from starting with $5,000 to potentially having a $364,000 income over 12 months. Now, what would interfere with that? Well, maybe my actual averages decrease significantly. Maybe I lose my mind and I start violating all of the rules that I learned in trading the adaptive entry system. Maybe I just get crazy emotional and go, hey, I've lost my mind and I had 58-point loss today. I'm going to triple my contracts tomorrow because the market owes that back to me. All of those are actually legitimate emotional responses, reactions that traders have to their trading. And by having a financial forecast for your trading, your personal trading business, you can even a lot of that emotional turmoil those emotional roller coaster swings out. That day we had the loss of 58.65 points. I didn't like it. I'm going to be honest, I didn't like it, but I plugged it into the trading plan and I looked at what the 12-month forecast was. I looked at what my averages were, and all of a sudden it's just not really that big of a deal because I'm no longer focused on a single day. I'm focused on averages that I believe I can continue to recreate. I will have additional losing days. I will have a lot of additional winning days. And as long as my average of the net of those continues to be reasonably in line with where I am right now, then I have a reasonable expectation that I could have a $364,000 income over the course of 12 months. Okay, so that's category number one. Now we show this for demonstration to show how to take your performance at the end of the day and plug it in and see what your financial forecast is. I'm going to do this for the all category where we only trade from 9:30 to noon and we take all 4 signals. So we did 45 points today, 9 trades. So 45 points. We had a planned losing day today because that's our, 1 day a week, 1 day per 5 days. So 45 points times $20 a point per contract times 3 contracts. It's a $2,700 day. And we had 9 trades, 3 contracts per, so it's 27 contracts. Okay, so now we're going to do exactly the same thing. The story's a little different on this because this is only trading from 9:30 to noon. You have a more limited time to trade, but you are taking all of the signals. So our average winning days are 24.27. Our average losing days are 24.66. What are the frequency? Well, we have 11.2 weeks behind us, but we've had 17 losing days. So we are ahead of planned losses in terms of frequency, okay? Does that alarm you? Well, it shouldn't initially. Let's just study the data first before we get emotional about it. I know what my averages are, and my averages are taking into account the fact that my frequency of my occurrence rate of losses is greater than planned. Now, it might not stay that way for the rest of the year. It might decrease and get back in line with plan. Well, then I'll adjust my forecast at that time. But at this point in time, at this moment, I know that I'm ahead of plan in terms of frequency. These numbers are already calculating that increased frequency into the average, so I can trust and rely on these averages. So I'm going to come down here and I'm going to base my future forecast for the next 41 weeks on 24.27 on my winning days and on minus 24.66 on my losing days. I'm still capped out at 3 contracts here, and this tells me trading from 9:30 to noon, $5,000 starting balance, that I could potentially have a $220,000 income. Again, that could be influenced by I end up for the next 41 weeks with a lower average performance, or I end up with a higher average performance. I mean, let's just look at this for a minute. What if my average winning days drop from 24.27 to 18? Oops, that's incorrect. I got to come down here. So 18. It still is giving me a forecast of $158,000 over the course of a year, and I started with $5,000 in the account. So I don't need to worry too much. I need to set aside a lot of emotion that is associated with trading, all around money. I need to set that aside, and I need to focus primarily on what can I do to maintain my average, increase my average, improve my own knowledge and my skill set in trading. We are here in the live trading room with our community of traders, helping traders do just that. So if I put this back at 24.27, well, you know what? I'm going to put it back to 18. I want to show you something here. Remember I told you that you can limit your risk exposure by capping the number of contracts at 3 contracts? Well, you could increase that. You know that no matter what you put in there, it first of all is going to be limited to be no more than 10% of the balance of your account. So if I'm only working with 10% of the balance of my account, and I saw that my average performance has decreased as we progress through the year, and my projected income has decreased, well, I can influence my projected income. Maybe I want to increase that to 5 contracts. Maybe down the road I'm willing to increase that to 5 contracts if my average performance decreased. This way, what you're doing is you're balancing together your average performance, your maximum risk exposure, increasing it a little bit, but always knowing that it's less than 10% of the balance of your account. And you then have some say in what your 12-month income forecast could be. So 3 contracts. I'm going to leave it at 3 contracts max. I'm going to put this back to 24.27 because that's what represents the current run rate. Now, this is really important in my opinion. This is my last comment, to do this every day and to slightly adjust these every day so that they correspond to your actual run rate. You know, if tomorrow the average actual on winning days is 24.6, I'll adjust it. If it's 23.6, I'll adjust it. You adjust it every single day so that you have the most accurate go-forward forecast. This process of using the adaptive entry system combined with the personal trading plan positions you to have a solid, winnable trading business that you can count on. There are no guarantees, but this positions you to have some influence over how well you do, how you perform, and how much money that you choose to make from your trading. And as you can see, with $5,000 in the account, we don't need to start with a whole lot. So I'm going to finish with the averages in that category of all signals 9:30 to noon. On a daily basis for the last 70 days, we're averaging $438.71 a day per contract. On a daily basis in the 7 to 4 trend bias only, we're averaging $670.71 a day per contract. And in the optimum category, which is 7 to 4 trading all signals for the last 70 days, we're averaging $1,419.71 a day. So this is a business that you can get into very easily. You need a PC, you need a internet connection, you need a little bit of training. We're here to help you provide that. We think you need support. Our live trading room is ideal for you to do that. You need the software. New Cycle Trading is providing that for you. That sounds like a lot of things that you need, but the cost of all of that is a fraction, a small fraction with an enormous return on investment of what you need to spend, what you need to put out in terms of expenses for your personal trading business. And hey, if you can go from $5,000 to say $200,000, I'm kind of splitting a conservative number there, over the course of 12 months. If you can generate a 12-month income of $200,000 and it costs you, $12,000 or so, $10,000 to $12,000 over the course of 12 months to get there, to me, that is a no-brainer. So appreciate all of you who have been with us in the live trading room, and appreciate all of the accolades and compliments that we've been receiving on behalf of New Cycle Trading for the adaptive entry software.